At 8 o'clock. Call the audit committee to order. Morning, everyone. Let's see, have a motion to approve the agenda. Second. All in favor?
Aye.
Okay. Action items, none. So we'll go to informational educational items, the audit results by Brian. Morning.
Good morning. Joining us today from Young Hyde & Barbour, our independent auditors are Jennifer Files and Brian Newland. They're here to wrap up the audit and go through all the required communication as part of the audit. As part of this presentation, they will discuss 2 recommendations for improvement, and then when they're done, we'll provide a status update on those recommendations. Also joining us from staff is Mike Beardsley, who can answer hopefully any IT or OT questions that they have about the audit. And also joining us is Sally Deller. She's our new finance director. She's been with us for about 3 months, and we're thrilled that she has joined us. So with that, I'll turn things over to Jennifer.
Thank you, sir. Thank you to the committee members for having us back. I'm happy to be back and reporting that we have a clean, successful, completed audit process. So my appreciation and thanks to Ryan and his team. We did take it easy on Sally this year. We promise not to do the same next year. We will make sure she's fully engulfed into the audit process. But that was your welcome gift. So what we have, I think you should all have a copy of our required communications and our audit results. I'd like to go through those with you, answer any questions you have. We did begin our field work, a little bit of the overview of the process. We did begin our field work towards the end of March, and we will issue an unmodified, clean opinion on the financial statements. All of our reviews have been completed at this point. We've also taken the report and reviewed it in conjunction with the GFOA's certificate program to make sure it's in compliance with that as well. I've included in the packet today, normally we don't go through the opinion letter, but I have included a copy of it in the package today so that the committee can see it. It does look a little different than what you've seen for the past, I don't know, 15 years. That's nothing to do with Loudwater specifically, but is more so the change in our accounting and auditing standards. The opinion letters have changed this year. So you're the first, probably the first in the state really to come through with the new opinion letter. So I included that in the packet so you could see it as well. But it is still a clean, unmodified opinion. Going into the required communications with the committee, some of the things, the preferability of accounting policies and practices, we do review any changes, policy, procedure, control environment. If there were any issues or any concerns we had, we would let you know through this process with the changes that management has made. But we have no concerns or issues with the change in accounting policies or practices made during the fiscal year. We did not identify any significant or unusual transactions, any areas where there's a lack of authoritative guidance. New accounting pronouncements, a lot are coming forth, and there's an attachment in here. We'll go through some of the upcoming pronouncements that will be effective for the authority in the next few years. On page 4 of the required communications, there are a few estimates that are included in the financial report. I think it's important for the committee members to know what these estimates are. We do review them through the process to make sure that the assumptions, the information, the data that management has gathered to be able to make those estimates, we review them to make sure they're reasonable, they're supported where possible, and we have no concerns with those estimates that they've generated. But you can see there are 5 main estimates in the financial statements. The first being unbilled accounts receivable. These are the customer accounts that as of 12/31, the customers have not been billed, but they have received service. Based on the timing of the billing process, they will be billed January through the end of March for that service that has been rendered. Because of the timing of the audit, there really isn't a lot of estimation in that because the bills have been produced and distributed to customers subsequent to year end. There we go. Thank you. Item 2 there is depreciation expense. Depreciation is always an estimate. The authority uses a straight line method based on the estimated useful lives of the assets, and it has been consistently applied across all of the assets. Fair value of investments. These are categorized within the hierarchy for fair value as level 1, 2, and 3, but they are estimates and can change. Compensated absences, and then the last one there is employer pension and OPEB liabilities. Again, those are based on information that's given from the VRS and from the actuarial evaluations, but they are estimates as they may change in the future. The audit adjustment section, we did have 4 adjustments and 1 reclassifying entry from the original trial balance. So this information is provided so that if you're looking at information that was previously provided to the Finance or Audit Committee in comparison to what you will see on the final ACFR when you receive it, there were a few adjustments there. The net effect for the overall is an increase of net income of $3 million. And we are not aware of any uncorrected misstatements within the financial statements. Yes, I think there was one adjustment on oversizing that in a couple of our sample selections, we had asked some questions and dug pretty deep into oversizing, and there were a couple small adjustments that were made to that liability. The other items, I think, maybe were just the timing of reconciliations, and we need the trial balance a few weeks in advance of actual audit field work, and the remaining entries were because of that.
Saw that reading before. What is oversight?
So we have what we call developer agreements for oversizing. So if a developer is coming in and they only need, let's say, an 8-inch pipe for their development, but we need to build a 12-inch pipe, we'll reimburse them for that. And so we can, it's actually one of their recommendations for improvement is the reconciliation because it's a combination between engineering and finance. And so how we track that and making sure that they match up and we're not either overstating or understating our liability.
From there on the next page, we move into a copy of the opinion that you will see in the ACFR that is published this year. We've moved into a 3-page opinion, but a lot of it is just movement of information. There is some new information, but a lot of it is movement. So at the beginning of this, before you'd have an intro paragraph, now we start with the opinion. So if the reader of your financial statements get no further than the first paragraph of this, they at least know what the opinion is. So the opinion is that we have audited the financial statements of Loud and Water, and that is a clean, unmodified opinion. The basis for opinion is next. This is that we conduct our audit in accordance with generally accepted auditing standards, government auditing standards, and we also look at the specifications of audits for authorities, boards, and commissions here in Virginia. So we do that compliance testing as well. So that's the basis for our opinion. It then goes into the responsibilities of management for the financial statements, and the financial statements are the responsibility of management. The next page goes into the auditor's responsibilities. We're not responsible for the financial statements themselves, but the opinion that's issued based on our audit process. And then it goes through some of the different pieces with gas and government auditing standards, what we do in our process of those bullet points. The next 3 paragraphs, this information is similar to what you would have seen in your prior opinions. The required supplementary information. This is your pension and OPEB footnotes, or the RSI tables and their respective footnotes that are required as part of your report. The other information paragraph talks about it's your the information, the organizational chart, the letter, the transmittal letter, the statistical section, the different pieces of your ACFR that are required as part of the GFOA program. That encompasses the other information. That is unaudited. We do read it. We do make sure that it's consistent with anything that we have audited. We make sure it's consistent with anything else presented in the report, but those pieces are unaudited. And then the last piece talks about we also issue our report on internal control over financial reporting and compliance, and that is the next letter that we have presented here for you. So this opinion, this report, I shouldn't say opinion, this report is also a clean report. We do not do an audit of Loudon Water's internal control environment, but we do assess your internal control environment in order to properly plan and perform an audit. With that, under government auditing standards, we are required to issue this. If there were anything that came out of your internal control processes in relation to our assessment, if we found any compliance issues during our assessment, they would be noted for you in here. But this is a clean report on those items.
So internally, we would recognize if we had a deficiency, a significant deficiency, that would be self-identified and reported out to you? Is that?
In some cases it is. Other times we identify it through the process, and then we work with management to determine if there are other mitigating processes or controls that help to reduce the severity of any findings. Mm-hmm. But what your management team has done here at Loudon, you have a very strong segregation of duty process, control environment, good policies that surround that control environment. And I'm speaking from the financial statement processes, disbursements, receipts, payroll. Brian can speak more specifically on the IT side of processes and controls. But yes, if there were things that they identified as weaknesses or that we identified through the testing of those items, they would be identified here.
So could you give an example of what a deficiency and a significant deficiency would be?
Yes.
Or anything rising to a material weakness, I guess.
Yes. So let's start with the 3 tiers.
Okay.
There are 3 tiers of defined accounting auditing deficiencies. The lowest level being a control deficiency. This might be something where maybe bank reconciliations are not completed timely, or maybe they're completed but they're not reviewed by a separate independent party in a timely basis. That might be a control deficiency. It doesn't mean that cash in and cash out isn't working. It just means that there's a blip in the system that maybe prevention or detection is not happening. There's an opportunity for something to slip through. So that is a control deficiency layer. The next layer is a significant deficiency. A significant deficiency can be one deficiency on its own, or it can be a combination of small deficiencies that when you package them together, brings it to this middle level. This middle level, then there's a higher likelihood that an error, a misappropriation, or something fraudulent could possibly pass through when it comes to your financial reporting. Not everything is fraud. Sometimes they're errors. Mm-hmm. But at that significant deficiency level, that assessment is that there is a higher likelihood that that error would pass through the whole process and make it to your financial statements. There are not compensating controls in place to mitigate the risk to a relatively low level. In that case, it could be, as an example, again, not Loudon Water specific, but just as an example of that type of deficiency, it may be something that there are accounts that are not reconciled. Things are processed, but there's no review process or reconciliation process that allows the information to get all the way to the financials. It could be in some organizations that are smaller that they do not have the necessary level of experience or expertise. Governmental accounting is complicated. Maybe they don't have a CPA or a finance director or someone that has the governmental expertise to be able to know the differences, the nuances of governmental accounting versus for-profit or private accounting that would allow something to go through. Even though the processes may be there for things, cash in, cash out, everything to work, it may allow there to be an error or a deficiency in your financial statements to occur because you don't have the necessary experience or expertise on staff to know the difference. So a lot of times we see that being a significant deficiency in a control environment for organizations. The highest level of deficiency is a material weakness. In those situations, there can be any number of reasons of what the deficiency is. It can be a lot of little things that lead up to a material weakness, or it can be one really big deficiency in the internal control environment. But in that case, there's a very high likelihood that an error or a misappropriation would not be prevented or detected as the information flows to get to the financials.
I have a question. So there is the significant side and the severity, right, of deficiency. So this, and correct me if I'm wrong. So the severity is and I'm talking about the scale, the low, the moderate, and the high scale in terms of risk assessment and severity, which is part of risk assessment, I believe. I read the report this morning before I got here. So what I wanted to ask was, so when it comes to the severity of deficiency, that's the moderate one, right? The significant one is the lower, right? In terms of scale of deficiency.
Control deficiency is the
Lowest.
Significant is the moderate.
Okay.
Material weakness is the most severe.
Okay. So what I read in the report was, and I remember this, is that there was a severe deficiency, and somewhere it said that's moderate. So the severe or the significant deficiency is the one that's moderate, right?
Yes.
Because and you and I both know, and I'm sure, I assume everybody else knows, this question is really important. It's not that we just stamp this is low, this is moderate, or this is high, because we classify them in different sections, making sure that, which one deserves more attention as opposed to the other, right? As you just mentioned, right? You mentioned controlled, and you were differentiating it between significant deficiency and the other ones that you just mentioned as well. Because in terms of incident or risk assessment, then we need to make sure that we materialize that, and how much attention and resources do we need to provide to that, right? So,
Sure.
Right. Yeah. Okay.
So as we get into loud and water specific of deficiencies, as Brian mentioned, we did have 2 items that we recommended through this audit process for improvements. Now, certainly any organization, when you have any level, you do need to look at the significance of the findings and recommendations, and the cost benefit of addressing those. The next letter that we have here, this is our recommendation letter coming out of the audit process. We have 2 items, both of which we classified as a control deficiency, the lowest level. We did not deem them to be significant or material. So the first item that we have there is on the oversizing reimbursement. We looked at that area pretty significantly again this year. And it is, a lot of the data comes from 2 departments and is being captured and maintained in an Excel spreadsheet. And that's a part of our risk assessment process. Anytime there's something offline or outside of the system, there is room for human error. And that's just the nature of that type of process. So in this, we did, in our sample selections, we expanded our sample selections, and we found a few items. It was not overwhelming. Certainly, if it were, it would have risen to a higher level of deficiency, but it did not. I cannot comment on where it was. But we did identify that there were some things, and Brian, Eileen, the finance team, they did a great job of going back through and digging through and finding things. And in some cases, it's not always happening in this fiscal year, so they do have to dig back a little bit for us. But we were able to get comfortable, but still wanted to bring forth the recommendation to the management team and to the committee to spend a little more time in this area again and see, are there others that need to be reevaluated based on information? And maybe the information has changed. Maybe when these liabilities were posted at one point in time, that information, that was an estimate, or that was what was known then, and maybe things have changed. So I don't want the committee to think that the information was in error, but
So the numbers are fine. No. We oversized the pipe, we know what we put in it, we know what we put in, right? It's just the timing of when those.
So the way it works is we get an estimate for the construction cost that a developer will be eligible for reimbursement. And let's say it's $500,000. And so we actually have two liabilities that we have. We have one, which is the possible reimbursement, which actually zeroes out. We don't have to show that on our books. The ones that we do show are the ones that we have to pay that year, or where connections have been made and we know we are going to pay, but maybe we're just not going to pay this year. And so what we've been doing is we've been going back through and looking at our liabilities that are still outstanding and comparing them to engineering, and if they're off, trying to figure out why they're off. Some of it is, as Jennifer mentioned, the estimate of the construction cost was put in, and now we have the total cost, which may be less, and so we need to reduce that. And so one of the things that we identified with WeTran, our manager of land development, is when we actually have a project with Mike's group to leverage SAP more and try to get all of this inside of SAP instead of trying to reconcile two spreadsheets at the end of the year. All the liabilities are in SAP and carried on our books, but there's no talking in SAP between the engineering and financial side. Mm-hmm.
And then the second item we have there on page 2 is the payroll reconciliation review. Now, during this process, we were not concerned that the reviews were not happening, more so on the documentation of the review process, because us as auditors, if we can't see that it happened in some fashion, did it happen? Did it happen timely? So in our subsequent work, and that's why this is at the control deficiency level, is just to make sure that all of the reviews are well documented. That will help protect the staff who's preparing them, the staff who's reviewing them, and then also kind of puts a seal from a management overseeing the process that is actually being done. It's the check and balance. So just to reiterate that everything that is being reviewed should be documented in some fashion.
Give us an example of this.
Yeah, so for this one in particular, payroll, anytime payroll is processed, it should be reviewed prior to, it can be preventative or detective reviews, either reviewed before it actually gets processed and transferred out to the employees, or it can be done after the fact, and then you have time to correct it timely. But that review process should be, whether it's a physical signature and a date to show when and who did the review, or if it's a stamp, if it's electronic review, that's fine too. But that stamp process, that signature process, letting us know as auditors that this payroll process was actually reviewed, the information is correct, accurate, there's no extra employees or missing employees, just to make sure that it was reviewed.
I do have a question right there. So the person whose signature is there, right? It says PC, but for somebody who's just looking at that right now, who is this person? Because generally when we get a signature of somebody in a document, in a policy or legal document, we, at the bottom, we actually do put their position or their role. So we understand, because if somebody looks at it and they want to go back and follow up with that person, instead of going through, many different steps or many different people to get to that person, right? Then it's also a good idea to actually put the person's position in, for example, if it's a CIO, it's like Chief Information Officer, right? If his name is Don Watson, at the bottom, it should say Chief Information Officer.
Okay. We do have the position in there in this of who actually reviews the payroll reconciliation. It's our firm practice not to put individual employee names into the letters.
Okay.
But certainly if that's what the authority would like to do, they can do so in their response.
Because I would strongly disagree with that. It's for the signature to be there, that's great. But from a risk point of view, a signature is highly, it's highly dangerous to get forged, right? As opposed to a person's name. I'm not disagreeing with you, but there is value to what I'm saying here. If you put a person's signature there, it's always like, okay, that signature can get forged, right? But if you put a person's name just in there, they don't have their signature there, there's no chance of that getting forged. You follow what I'm saying? So
Yes.
Yeah. And I mean, I'm saying this because this has been brought up in the government and we talked about it at great length, because there's been forgery of people's signature even in the government. That's the reason why we put the position at the bottom as well. I designed these documents, so I'm able to talk about that. The other thing I wanted to ask you very quickly was where it says the review process and approval was not formally documented for the third-party verification in all occasions. Can you elaborate that a little bit more?
Yes. So in our sample of payroll, we look at a variety of payroll processes throughout the year. We don't look at one.
Right.
So in them, for all but one of them, there was documentation for the review process. So the preparer, the reviewer, it was all done and documented. There was only one instance where it wasn't documented.
And the reason for that was?
It could have just been that we misplaced the email or we forgot to do the signature. We actually addressed this in the status update. We put a new process in place. And so going forward, we feel confident that we'll have proper record keeping of all the reviews for this.
Okay, so there was just a misstep, or it was a human
Yes.
error of a?
Yeah, human error.
Okay.
Yeah.
Okay.
Yeah, it was just human error.
All right.
And again, it's not a lack of process or a lack of policy at the authority level. It was just in the sample that we tested, there was one. And the documentation piece in a post-COVID world is more important than ever. When you have
Absolutely.
employees that are working remotely or hybrid environments, making sure that those processes are still happening, that's part of our risk assessment and part of our testing. So that's why we bring this back to the committee. The policy is there, the process is there. We just maybe happen to find the one that existed in the 12 months.
Right. And you guys did a fabulous job. I read the report this morning. So, I mean, I came with a few questions and I was looking forward to asking you where, what we needed to know. So, and you brought a very good point and it's a very valid point where pre-pandemic, the way we operated in terms of policy and procedures, they're still there, but we are still in the pandemic, right? So post-pandemic, we're going to be altering those practices, making sure that we have less than few errors that we have, right? There's one error here, but we want to eliminate that. But next time when you come to the board and talk to us about this report, there may be another error or two. But the point I want to make is that you made a good point where we are looking at the timeline between the pandemic and how, people are working from home, it's hybrid. We want to eliminate or eradicate as many errors as we can, because those errors might be new, right? We're all learning as we go. So that was my point here. Thank you.
Jennifer, who would do the third party verification? Not a person, but what position? Who would do that in an organization?
Really anyone at a high enough level that can see the information, but not be involved in the actual approval of the time cards and the positions or the processing of payroll. The next couple of pages go through upcoming GASB pronouncements. I think The one that will take a little bit of time this year will be the lease standard.
Mhm.
I think we are officially out of what do they call them, exceptions,
Yeah.
and
Yeah.
we're done. We're gonna do it. So leases, I think this year. The other ones, I mean, I don't see there, maybe some of the PPP in GASB 94 for 2023, depending on what's happening and what you're going through at that point in time. But all in all, we'll certainly work with your management team if they have any questions as they implement these standards, that we're available to help them with the process.
Yeah, are we involved in any PPPs?
We're not aware of any at the moment. We haven't identified any. I mean, we'll continue to look for those, but we don't,
Yeah.
we're not aware of any at the moment.
The county hasn't done many themselves. I know they did a PPP for the stadium with DC United there in Leesburg. And there's a handful of
Mhm.
others. They did one for the parking garages at the Metro, but they don't,
Yeah.
yeah. And normally I don't think we're involved.
Mhm. No, we have a few leases that we've identified so far, but not very many, very small dollar. And then the other one, we'll need Mike's help, but this isn't for next year, but 96, the subscription-based IT arrangements. We actually started working on that a few years ago because prior to the pandemic, it was supposed to be implemented a little earlier. So we have a head start on that. And that will be, we think, fairly, significant for us.
It's just how we report our subscription based.
Exactly.
It seems like everybody's moving to subscription for
Yeah.
pretty much
Yeah.
anything. It's
Yeah.
like you don't buy the software anymore, you get a subscription.
Right.
Right. Yeah. So it'll just be how we report.
That's great.
And then the next pages there are, before I turn it over to Brian on the IT side, we've included a copy of the representation letter. So this is the letter at the end of the process that the management team signs, really telling us that they have been, they take responsibility for the financial statements, that they have provided us access to everything. They have answered our questions fully, disclosed any legal non-compliance issues, errors, anything like that through the process. We should include a copy of that so the committee can see that what management has represented to us to conclude the process. And then with that, I will turn it over. Certainly, we're open for any questions you have, but I'll turn it over to Brian Newland. Brian leads our risk advisory services team, and we, the financial statement auditors, rely very heavily on their team because we can't get through a financial statement audit these days without the use of IT and technology and the integration. So they do certain pieces of the process, both in risk assessment and testing, to integrate into the financial statement audit. So I will turn it over to him to talk a little bit about what their team has done to institute the audit.
Thanks, Jennifer, and thanks to the committee for having us and letting us talk a little bit about the financial statements and the IT piece as well. But yeah, so I think the first thing I would share is around the scope of what is covered with the IT component of the financial statement audit. It is an integrated exercise. So the IT specialists are involved in the re-engineering process and the planning process for the engagement. We're in close communication with the financial engagement team to talk about changes that have occurred in the environment that, from a business perspective or an accounting perspective that might also conduct our own risk about what's changed there.
Can't hear you. We can't hear you.
Put this a little bit closer. All right, is this any better? I'm going to say yes. All right.
Yes, sir.
Regarding scope and risk assessment, the IT specialists focus. We work with the financial side. We work with the IT side to see how that would maybe backflow through to the financial statements as well. We we introduced a little bit of a new area into our scope this year, and that was the OT section. And we talked about that at the planning. So we looked at some of the IT general controls and application controls and perimeter controls around the corporate network, around the SAP environment, so the accounting platform itself, which is logically separated. And then we did expand some testing into the OT area as well, because that's so important. So as you can, heard, there were no reportable findings from the IT section, which I think is really good. We've had some recommendations in the past. And so again, for each of those kind of in-scope environments, we look at password configuration requirements. We look at privileged user access. We look at the specific users that are in those environments. We look at a lot of the monitoring controls from a security perspective, both sort of the bad guys trying to work their way in, and then how the IT team watches all of the data as it traverses the network and looking for data going out. So we look at in all of the different layers of security controls. And again, we kind of do that all with the sort of with the financial statements sort of lingering in the back of our minds as we approach it. So, this is not a comprehensive full scope IT audit, but we do look to make sure that the IT department and the security teams are monitoring things appropriately so as to reduce the risk that might flow through into the financial statements eventually. I think it would be difficult to, it would be very easy to draw a line between any type of information technology or cybersecurity event, because it would directly impact the financial statements. If you think about a ransomware attack, if you think about an attack in your OT environment, that absolutely will impact the financial statements. So that's why we tried to look at it from a comprehensive picture as best we could. So that's kind of my summary. Again, we did risk, and the other thing I'd add is we did include a cybersecurity questionnaire that we typically would apply to our public SEC clients. So we went through that exercise. We thought that the risk for Loud and Water was high enough that we needed to expand our procedures to include that as well. So that was kind of above and beyond what our standards required.
Question on that. Would you be able to share some of those findings just at the higher level? Depending on the questions.
Sure. So that particular questionnaire gets into things inquiring about what type of cloud service providers are being used. It discusses security training for the employee base. Things like phishing exercises and doing that on a periodic basis. It looks at the development of the information security program, and especially an incident response plan. It inquires about whether there's a specific control framework that's being used, NIST or CIS controls or COBIT. We probably asked 2 or 3 or 4 different times whether there were any actual cybersecurity events that occurred.
Right.
So if the answer is yes, that opens up a whole new set of questions. We look at responses. We look at the frequency and depth of vulnerability scanning procedures and pen testing. We look at the use of SIM software and event log correlation to make sure that that's being reported and that it's being reported in a meaningful way. Sometimes these event logs can be generated and then there's just large volumes. So that's a lot of data, but that's not a lot of information. So how does management take that information and make it usable and actionable? So those are all of the things that work their way into this cybersecurity assessment questionnaire.
Very good. Was there any surprise findings that you noticed? That surprising in a good way, not always a bad way, right?
Yeah. Well, I think no, there was nothing,
Okay.
nothing negative that was surprising.
Okay.
We're always pleased with how Loud Water progresses and the emphasis that's placed on cybersecurity. And always being at the forefront of information sharing. So participating in these ISAC programs that share critical infrastructure alerts among other water utilities and other utilities within the country, and then responding that way. So this entity has absolutely done that and continues to implement controls that are very forward-looking and planning for risks that maybe aren't in the news yet.
Well said. Thank you so much. Yeah.
Does Loud and Water use a third-party firewall? Company like, like banks all have third-party firewalls that watch the network, and then you get a report on how many port scans there were a day, and
Yeah.
or
Yep. So I think what you're talking about is a company like SecureWorks, where
Yeah.
they send you a piece of hardware, and
Yeah.
then SecureWorks kind of
Monitors.
monitors and looks for the knock.
Right.
I believe that is there's a lot of layers here. So I don't know that it's outsourced. But
I can
yeah,
answer
but
that
Mike
one.
can probably speak specifically to that.
The answer is yes. So we do have third party. We have an appliance that monitors our network, and and then the results of that's the SIM part of it that he was mentioning. It's an event logging and monitoring. That's monitored 24/7 by a third party. That's essentially our security operations center. It augments our own team because we have security specialists within Loud and Water as well. But anytime there's an event, they proactively notify us. And so that's really where a lot of our expertise comes from, and our sort of up to the minute responsiveness whenever there is some type of event. We get an immediate notice and an analysis of it, and then we can immediately react to it.
thank you.
Yeah, I'll say, Mike, when Mike gave us that presentation, what one was it? Months ago, 6 months, 8 months? Don't tell me it's
It's
a
over
year ago.
Yeah.
Oh, man. COVID was such a time warp. I was like, oh, you remember the thing 6 months? We were like, no, that was 18 months ago. Anyhow, it was so good, and it gave me so much comfort. I mean, you're just, our team's on everything on the cybersecurity stuff. I think most of the board was on that, if not all of us. But anyhow, I was impressed with what our organization's doing on that, and that made me feel very comfortable. Especially given that we're a utility and we're in the DC area and all the things that come with that.
Yeah, but it's phenomenal, but I know in banking, we get a report every month, and every 10 seconds, someone's trying to, at least do like a low-level port scan. I mean, it never stops.
No.
And like you said, all this information, and we get it at the board level, like, what do I do with it? Is this bad? Is this good? Should we be concerned? So you have to do it, but it's just, if you're a bank or a utility or any of the high risk, they never stop. I mean, it's constant, 24/7. I mean,
It's an arms race.
Well,
Yeah.
What it is.
Yeah, that's exactly right. And I think it's important to recognize that you have to be on 100% of the time. The bad guys only have to be on once.
Right.
And so it really is, it's a marathon. And the pessimist says there's really only two types of companies: those that have been hacked and those that don't know it yet. It's great to feel the warm fuzzies, but you can't say, okay, we've made it. You always, and that's why that response piece is so incredibly important. We do spend a lot of time asking about and looking at the incident response plan and saying, what are you going to do when this happens? How are you going to respond? Because that's sort of the other piece. If you look at some of these historical breaches, the companies that end up taking a big financial hit and reputation hit are those that responded poorly. But those that respond well tend to keep their stock price up and the reputation up. Not that you're trying to meet stock price, but
The thing that stuck out the most to me was the healthy level of paranoia. And because it's that mentality, you're exactly right about that, of course. And so there's that healthy level of paranoia. And I think we have that, and that's a good thing.
Yeah.
what about with the pandemic remote work? I'm assuming VPN environment?
It is VPN, but it's all built on also a zero trust framework,
Right.
which essentially assumes that even if someone is behind our defenses, they still can't get to anything because there's additional controls in place, role-based access and other protections that would prevent any further escalation of privileges.
Okay, thank you.
questions?
Any other questions you have for us, or?
You can actually on that.
Well, the last thing I usually do is just provide an update on the two recommendations, and we kind of already talked about those. The first was the oversizing. We've identified what we need to work on. We have processes that we're going to work on this year to leverage technology to improve that. And then the second was the sign off on payroll, and we've updated that process. We've documented it, and so going forward, make sure that we have all proper records.
So for engineering, like I'm remembering back when I worked with the national builders and we're doing land and a lot of land and we've got just spreadsheets out the wazoo. And getting all that data tied in was always a problem. And and that reminds me too, we used to sign stuff for Sarbanes-Oxley and all that. We're subject to Sarbanes-Oxley too, or no? We're not, because we're public or quasi-public.
You're so lucky. You're so lucky. Bill goes to jail if they.
Oh, my God.
Straight to jail.
Yeah, just take yourself to jail.
Okay, so we're not subject to that, but that's nice.
Yes.
But so what's engineering gonna do? They're just gonna.
So right now we have liability accounts for all of these projects. Each project is its own liability account, and we're tracking on our side and the finances what that liability is, and then reducing it each time we make a payment. Engineering is not in SAP at all. It's all, they have a spreadsheet that they keep, which basically is the same type of thing, but it's all in the spreadsheet. And we use a spreadsheet as well to try to reconcile what they have. And so what we found is, we have a couple agreements from the 1980s, and, we're actually going to work with McGuire Woods because the folks who were in charge are now deceased. And so we got to find if there's a trust or what do we do with that? Or we found, maybe in 2008, engineering says we got some connections, and I don't have a record of that. So we're trying to find a record from 2008 if we actually did have connections. And so it's just, we've identified the ones that are off, but now it's just really digging into why and what is the
Just
correct.
Older cleanup stuff.
Yes.
That's back in the day.
Yes.
And then moving forward, will we, or will they put stuff directly in
So
SAP?
that's what has been started, is how are they going to get, because all the projects are in SAP, they create a project, but how is that money that is being tracked put into SAP and then matched to our liability account? And so that's what we've identified as would be an improvement, but now it's really just working with Mike and the business solutions group to make that happen. Because the way SAP is designed is it doesn't talk that way. So we need to figure out how to make that.
But we can make it talk. That's the direction.
Yeah.
Cool. That makes sense. That's
Mhm.
cool.
So we think that'll help a lot.
Yeah.
Yeah.
No, that's great.
Yeah.
Questions?
Adjourn the,
Mhm.
Yeah, let's see if there are any other questions first. You good? You good? Right, motion to adjourn? Second. Okay, second. Favor? Okay, the audit committee is.
Aye.
I'll call the.
Thank you very much.
Thank you.
Thank you. Great job.
Thanks, everyone.
Congratulations on your 75th, the firm's 75th anniversary. Is that-
I don't have a gavel. Call the meeting to
I
order.
didn't know what was
It's
going
the gavel.
on.
It's the
The
gavel.
neighbors were knocking on the
It
front door.
worked. It worked.
What happens in my
Sometimes
house?
sometimes a subtle gavel works. I'll entertain a motion to approve the agenda.
I'll second it.
All those in favor?
Aye.
There's no action items. The first information item is the CAFR.
It's the ACFR now,
The
actually.
ACFR.
That was one of the GASB
Oh,
pronouncements that we took on this year. It is now, it's the ACFR.
Just mixing it up.
Oh,
Keeping
the
you on your
ACFR.
toes, Bill.
Yeah, so we've gone through a lot of revisions. Yes.
I learned something new today.
Annual.
Yeah, I was gonna ask. I didn't want to be the first one to ask.
The annual comprehensive financial report. So,
Caffers so 2020.
yes.
I
yes.
had never heard of CAFR
last
until I
century.
came to Loudon Water, to be
Now you
honest.
gotta, it's ACFR.
Now you have to
Yeah.
un.
It
unlearn
doesn't,
it.
yeah. Yeah.
All right, Mr. Carnes.
So, yes, good morning. Thank you. This is an information item. We will bring the final copy of this to your board June meeting, where we'll seek your approval for that. And upon approval, we will submit it to the GFOA for their certificate of achievement. As Jennifer mentioned, YHB reviewed it. We believe that we will be receiving that award again for that year. So just some highlights. The theme for this year, as always, is determined by Sue Crosby and her team. They handle all of the pictures and the design, and so it's going to revolve around sustainability this year. So And then there are 3 sections. Section 1 is the introductory section, and that includes the letter of transmittal, the board members, and the org chart. Section 2 is the financial section, which begins with the independent auditor's report on page 10. And then section 3 is the statistical section, and that begins on page 72. So the pictures aren't in here yet, but they will be. So we did receive the certificate of achievement for 2020. So that's in there, and there are your pictures.
Going for number 35. Huh?
Yes.
In a row.
That's right. That's right. And then the org chart, independent auditors report. And then, so just some highlights. Our assets exceeded our liabilities by 1.87 billion, and that's referred to as your net position. Our investment in capital assets makes up approximately 84% of that, and that's 1.571 billion. Your total net position increased 40.6 million, and part of that's made up by your investment in capital assets, 14.6 million. And as you can see, we did have an increase in our restricted net position and a decrease in unrestricted due to the bond issuance and defeasance that we did in summer of last year.
And how does, so we're up 2.2%.
Yes.
Net position increased 40 million or 2.2%.
Mm-hmm.
What's, how does, as we're looking long-term and we go inflation's 8% this year, because it's like, cool, you know, we're up 2.2%. But the real net of that is is it perhaps negative? I mean, I'm thinking of it in those terms, and maybe I'm thinking of it incorrectly.
Yeah, because most of it is our capital assets, and so part of it is projects that we've completed, and then part of it is deeded projects that developers have completed, and we'll see later. The deeded projects last year were much lower, and I'm not sure if that was dollar value or just not as many projects completed. But
Like, would our assets increase if inflation's going up?
if the cost of the projects increase, then
Yep.
yes, it will.
Like all that water, all the infrastructure we have in the ground, it's now worth more as inflation goes up. I mean,
No, exactly. The new projects that we take on, if those new projects that we're bidding out are increasing, then those values will be included at a higher level. But we don't go back and look at broad run and increase the value. Everything, yeah, exactly.
So okay.
Yeah.
Okay.
Brian,
Mhm.
so. Mark to market, these portfolio
Mhm.
rates are up, prices are down, so we have big negatives on that. Do we?
Yeah, so that, yes. Our investment income looks like we show as a negative.
Okay.
Because of our adjustment to market value. We don't sell any of our investments
So you hold
typically.
everything, do you classify hold to maturity or available for sale, or is everything hold to maturity?
Everything is hold to maturity. We have the ability to
Right.
sell,
So
but
you
we
would
never
not-
do.
right.
But we do make the fair value adjustment, which is one of the things that Jennifer mentioned. And
Right.
this year, yeah, it was not good.
Not
So,
good.
so again, we're making money off our investments, but the adjustment,
But the value.
yeah, yeah.
Thank you.
You're welcome. So let's see. Operating revenues did increase about $10 million, and that's mostly in your sale of water and sewer. And that's a combination of rate increases were 3% last year. You had a customer base increase of about 1.4%. And we also had an increase in water usage. And we had a dry year last year compared to 2020. We got about 15 less inches of rain last year. So I think folks were watering their lawns a little. Operating expenses actually decreased a little bit. We're still seeing kind of the impacts of COVID, of folks working from home, less office supplies, travel, electricity, those types of things. Depreciation did increase about $6 million. And then your non-operating, which is your interest expense, you can see that decreased. And again, that had to do with your variable rate debt, had favorable rates last year. And again, you defeased the 2013 and refunded your 2012 bonds. And then, Mr. Byers, as you mentioned, our investment expense actually shows we lost 1.5 million due to the adjustment for market value there. And then, so capital contributions was 64.2 million last year, and that's made up of 12.9 million in deeded projects. Availability charges was 49.1. And then governmental contributions were 1.7, and that was made up of 1.2 million from the county of Loudoun. Most of that was for the Howardsville project. And then we also received approximately $500,000 from the Commonwealth of Virginia for the Municipal Utility Relief Fund, which we use to assist customers who were negatively impacted by COVID. And so, and then just a couple of highlights, customer growth. We had 3,494 ERCs last year, and the budget was 2,200. Compared to 2020, we had a little more at 3,712. Total availability charges were 53.2 million, and compared to 2020, we had 56.6 million. We added 1,197 new accounts. So your total customer accounts at the end of 2021 was 84,820, and that's a 1.43% increase. Your principal and interest paid on revenue bonds last year was 20.1 million, and you ended the year with 216.2 million in outstanding debt. Your total investment portfolio was a little over 273 million, and the average yield was 0.63%. And so then finally, the management discussion and analysis, beginning on page 12, that'll provide you a narrative overview of the financial statements. The notes to the financial statements begin on page 27, and that'll provide more detail. And then the statistical section on page 72 will show trends in our capacity, as well as countywide demographics, unemployment rate, median income, and then also some stats about our operations, including total waterline mileage and pump stations and things of that nature. So that kind of wraps up some of the highlights. I'm happy to answer any specific questions that anyone may have.
For debt, we don't really have any exposure in terms of our interest payments because they're locked in.
Just your variable rate debt, which is a very small piece. I think it's about 12 million right now. And we've been paying less than 1% for that for the past few years. Yeah.
So it's just 12 million, so it's not a big deal.
It's not a big deal, no.
We don't have any derivatives.
So commercial paper?
So we actually just bought a couple pieces about 2 or 3 weeks ago now. We hadn't been investing in that. There really hasn't been much opportunity, but there were a couple that came out, and so we did pick up a couple of those. Yeah. It's I think like 5% of our total investment portfolio or so. Yeah.
I'm assuming we don't have any refunding possibilities this year because of the uptick in rates.
Not now. Eventually, your 2015 will be eligible, and Davenport did look at that as part of last year's, and we couldn't do anything at that time. But that will be your next opportunity.
What was the value on the 2015?
What's that issue?
I'll have to get back to you.
That's no problem.
And then there's, I really like looking at pictures. And it's just-
Yeah, our firm that we work with, they've been impacted by COVID as well, and so they're catching up. So yes.
Yeah, I know.
I'm so just like excited.
I'm sorry.
And I kept scrolling through blank pages.
I apologize. I know it's just the boring numbers and all the words.
There's got to be a graphic story that goes with this.
The 10Ks changed and they just changed to black and white.
Yep.
Here.
I know.
No more annual reports.
Yeah.
That's not the.
So we will. That's right. That's not the ACFR. We will have pictures for the board June meeting. I promise. Yes.
All right, I'm off topic. All right, so does anyone else have any questions about the ACFR?
I like the,
Well,
Your voice?
yeah, that's me, Mark. I like the universal excuse for the next 10 years. I'm still affected by COVID. How long are we going to use that?
Got a moratorium, Mark?
Yeah. I wish we could use it for paying taxes. That's all right. Great report. If you remember, CAFR is a really negative insult in South Africa. I brought it up about 10 years ago. I was always, because it's the first time I ever heard of CAFR report. So I'm glad they finally changed that name to something different.
We'll explain it to you.
Well, I want to thank the 16 folks that work in the finance division. They're the ones that do all the work that go into this. I just get to present it to you. So it's all credit to them.
Thank you. It's another job well done. I know it's not a process. Remember your predecessor commenting about it. But thank you.
You're welcome. You're welcome. Thank you.
All right, the monthly financial summaries.
ERC is not looking good.
Well, actually, I have an update on that. Yes, so your operating revenue totaled 34.9, which is slightly above the forecast at this point, and your non-operating revenue was 12 million, which is a little bit below forecast. So total revenue was 46.9, which is below the forecast of 49.2. But I will say, in May, we've had 2 data center connections so far that have bumped up our total ERCs to over 1,000. And so at this point, we're roughly 50 or so ERCs below forecast. So May is going to look a little better with availability charges. Operating and non-operating expenses were 47.2 million, which is slightly above forecast. Most of that is the depreciation and amortization expense, which at this point is still an estimate. Now that the audit is over, we're closing May and we'll run depreciation and that'll be more accurate for the May financials. So at the end of April, the ERCs were 587 compared to 2021 when it was 1,005. The budget for the year is a little over 2,500. And as I mentioned, we're going to look a little better at the end of May. We have over 400 connections so far in May. The capital spending plan was budgeted at 96.2 million, and the total spent so far was 19.7. Of that, 7.2 million was funded by user rates, and 12.5 million was funded by availability charges. At the end of April, your total cash and equivalents was a little over 283 million, and the average yield was 0.86%. But I do think at the end of May, it looks like it's going to be above 1. So get excited.
Wow.
That's right. I'm happy to answer any other questions about the April report.
Good.
I guess, I mean, it's probably not till next year. Again, 30%.
Historically, it's been about 50 the last few years. Yeah. Yeah.
Whatever. That's going to slow down. There's a storm in the ground.
Yeah, they got to keep going. They can't stop once they start.
But it's, yeah, well, they can stop. I mean, and they will, and then they'll put the project on ice, but
To get supply material.
they're not gonna, I don't think they'll do it yet. And that's the
Mhm.
half of seeds or something. And,
Yeah.
I guess data centers just doesn't matter to them whether interest rates go up or whether we're in a recession or not. They'll just
I
keep
think
doing
the
their
thing we monitor with that is whether they're going to go air cooled or not.
What's our sense of?
It really depends on who is doing the building. Yeah.
It's becoming more, I have no idea. Thing.
I think, well, if they're in our reclaimed service area, they typically want to go that way. But then I think what Robin has said, it really depends on if you're building your own or if you're going to be a tenant driven model. It kind of varies there. Yeah. Yeah.
But there's gonna be a slowdown. I mean, there has to be.
They're definitely well on the residential side, for sure.
Mortgage applications way down. 35, 40.
But again, that's maybe only half our ERC.
Mhm.
So that won't be till here.
It's still not, still not like the rest.
Yeah, right.
All right. Slowed down pretty heavy in 8 or whatever.
Mhm.
For a while, I mean, yeah, nobody was building any residential side.
Great, thank you.
You're
Thank you
welcome.
very much.
Thank
And
you.
then remember, the next meeting is June 30th. The last Thursday in the month. So keep that in mind. Don't show up here the 4th because there's an extra one. At the
We
end.
will keep you updated. Currently, the only thing on that agenda would be the financial summary report.
Okay.
So it's,
So we might cancel.
might cancel. Yeah.
There's no other questions. We can adjourn.
Second.
All those in favor? Motion adjourned.
Thank you.
Thank you.
Thanks.